I'm Scott Robinson, professor of real estate capital markets at NYU Schack, and I'm here with Kevin Chen, PhD and chief economist at Horizon Financial. There's obviously been a lot of market news in the past 3 weeks or so. I feel like, Kevin, you probably would agree with this. I feel like every day we absorb a week's worth of news, whether it's how municipalities and governments are combating the virus itself, how the capital markets are trying to suss out what the economy might look like, and of course, all the I'll call it rapidly evolving economic news as well. You and I have spoken in the past about the Chinese economy and its integration and influence and connectivity with the global economy, particularly the US economy. So I think your background is very relevant to what's going on today. And I know my students are very interested in learning about the virus's impact on both, of course, the US economy, but also the Chinese economy and the global economy. So I know you've given a number of presentations. You're highly sought after during this time period for better or worse. So I appreciate your time with us to talk about your views on the virus's impact to the Chinese economy and the global economy as well.
Sure, yeah. Thank you, Scott. Appreciate very much for this opportunity to share my view about the coronavirus outbreak to the Chinese economy. It is true that I've been doing so many calls these days that I feel it's like probably the worst time, but also the most, I guess, interesting time, exciting time, you can call it. And but you know, I'm happy to share my view, and hopefully it will be helpful to our students. So I will get started, I guess. So about my background, I'm the chief economist at Horizon, also teach at NYU, been at Wall Street for over 20 years now. And I have to say that the recent market gyration is probably the worst I've experienced, much worse than 2008, for example, and also worse than the 911, what happened after that. If you look at the market drop, the speed and the volatility, you realize S&P volatility is at 145%, which is really 7 times as usual, and it's much higher than 2008. So, but today, I guess my topic, I will be covering about essentially the coronavirus outbreak timeline in China, the impact to the economy in China, the impact to the rest of the world, the outlook, and also, I guess, briefly about what we can help. And you know, we don't have a lot of time to cover a lot of topics, so, but I will focus on the what's going on in China and the economic side of the picture. So first, let's look at the timeline of the outbreak. Essentially, the coronavirus outbreak started in Wuhan City in central China. Wuhan is located in central China, a bit similar. You know, the city's function is a bit similar, like probably Chicago of the U.S. It's a central hub, it's an industrial center, and it's also the capital city of Hubei province. The city has about 11 million people, 9th most populous city, and I would say most importantly, it's a transportation center of the central China. Almost all the major railways, highways, etc., they all go through Wuhan. That's why when the virus outbreak happened, it hit China really hard because of central transportation location. So the timeline itself, I would say December 1st, 2019, last year, the first case was admitted to it was a suspected case, I guess, by the Wuhan Jinhan Hospital, which is a hospital specialized in infectious disease. And by December 30th, the Chinese National Health Committee expert team arrived in Wuhan and started the investigation. However, the initial investigation was not very transparent and caused a lot of criticism after that. And at January 1st this year, Dr. Li Wenliang, he and 8 other doctors, they in fact, they went public and told they were investigated by the local police for allegedly spreading rumors, which was very unfortunate. At Jan 1st, also the seafood market of Wuhan closed. Presumably, it was the original location of the virus, which jumped from animals to human beings. The January 6th, the city still had a big people's representative meeting and also had the province level meeting. By January 11th, it was still not understood that the virus could be spread human to human. And even at January 18th, there was a big Chinese New Year banquet by 10,000 people. Unfortunately, a lot of people who attended this banquet later on confirmed to be positive on virus. By January 20, the Dr. Zhong Nanshan, who is, if you wish, he's the equivalent of Dr. Anthony Fauci here, who leads the infectious disease control effort in China. He went public and said this Wuhan outbreak is a serious issue that has to be taken seriously. That, in fact, caused people first to pay attention to this. And next day, there was a Spring Festival, Chinese New Year, but immediately after that, January 23rd, the Wuhan city was locked down. So after that started the whole lockdown process, and by February 2nd, Dr. Zhong went public again, that all the patients need to isolate themselves because it's very, very dangerous. It's a very easy infectious disease, and they started to construct turning the stadiums, convention centers, etc., into quarantine camps. So Feb 5th, the Americans and other foreigners were evacuated from Wuhan. Unfortunately, on Feb 7th, Dr. Li, the initial whistleblower, he died from coronavirus. Very unfortunate. And by Feb 10, the deaths of the coronavirus already caused more deaths compared to the SARS outbreak in 2003. And by Feb 13, the mayor of Wuhan and Hubei province party secretary, they were replaced. And the deputy mayor of Shanghai was sent to Hubei province as a province head. I would say this was the turning point for the situation in Wuhan. Before this, the coronavirus outbreak in Wuhan was chaos, was very tragic situation. After the new province, the head was sent from Shanghai, he started to calm down the situation. New case, in fact, spiked at the next day, February 14, which is also the Valentine's Day, which is actually well remembered now in China, because that was the day the case spiked. And after Feb 14, the stock market in China started a robust rally, and also the new case numbers started to drop substantially. By March 20, for several days, the new cases came down to zero. For now, there are still sporadic cases. Every day, there are probably 10 to 100 new cases in different locations. But all in all, I would say the situation is under control. So by March 22, roughly 2 months after the initial lockdown, Wuhan City, in fact, lifted the lockdown. People actually allowed to go out, and the normal life has been slowly resumed. So that's the timeline. If we look at the number of patients, the total confirmed cases are 82,000. Total recovery is about 74,000. Total deaths is 3,200, and mainly the deaths are in Wuhan City, so 3,159 deaths. Very unfortunate, the deaths are mainly in Wuhan City. I would say it was really the dramatic outbreak in the city. I would also like to point out that due to the lockdown of the city, it was such successful containment of the cases spreading outside of Wuhan. So outside of Wuhan, there were in total 131 deaths in China. So that was, to some extent, it was a success in the sense that the virus was contained within the city. And of course, the city, Wuhan city, paid a huge price for it for the rest of China or for the rest of the world. And this slide, essentially, we can see that when the lockdown happened, the cases basically peaked about 10 days after the lockdown and had been slowly drifting downward and then close to 0 new cases. That was the case in China. And I would say in Italy, what we are seeing is similar pattern. After lockdown, about 2 weeks, the new case peaked. So hopefully we can see a similar situation in New York or in the US as well. Because here, New York City started the lockdown about 10 days ago, Monday last week. So most likely, we are going to see the peak probably by tomorrow or Saturday, if the curve is similar curve to China or to Italy, which I'm reasonably confident in this case, because scientifically wise, curve is a curve. So after lockdown, infectious disease, essentially, the only way to control it is really to isolate and to separate people.
Yep. I agree. You know, it's interesting. Sorry, just to interject a little bit. I was really impressed with the effort that Wuhan made on lockdown. I would say it would be very difficult for any city in the U.S. to execute a lockdown of that degree. So while technically the US and New York's lockdown started about 10 days ago, it's much more soft and kind of a fluid lockdown. I'm not sure how that might impact a peak virus spread and obviously the economic impact, but kind of interesting to note those two differences.
Sure, that is true. Yeah, you know, if you look at some of the details, it's very, very sad when the lockdown happened in Wuhan. It was very, very harsh lockdown. Some of the rooms, the buildings basically were put on a lock and people were not allowed to go out. Food was delivered into the units to their windows. So doors are essentially hard locked down. So people are really not allowed to leave their homes. So it was a huge cost. But it's true that for those very harsh matters, the result was positive. It was good. But it was at a huge cost. So now we go to section 2, the impact to the economy of China. I would say first, the coronavirus outbreak happened really at the worst time. Why? Because before the outbreak, the Chinese economy already has had a substantial decline of the growth rate. 2 reasons. One, the extremely high leverage ratio of the whole society, from private sector to government sector. Very high leverage, and basic economic theory knows that high leverage will cause a slowdown of the growth because your profit goes back to pay the service debt. Second, China had a big trade war with the US for 2 years, and the very high tariff really hurt a lot of the export sector in China. So that was really the background. And China's share of the world GDP, in fact, declined slightly in 2018 and 2019. So it was a very unfortunate time. And if we look at the growth rate, it went from double-digit growth all the way down to single-digit growth. Last year was a bit more than 6%, and this year we might have a much lower growth rate if it's not negative. And private consumption and investment in China have been slowing down substantially before the coronavirus outbreak. So now the outbreak really, I would say, made the situation much worse. And here is the leverage level. You can see that from 2004 until now, there will be a substantial increase of leverage, in particular the corporate sector. And if you have a highly leveraged corporate sector and you have a cash flow problem now due to the virus outbreak, the companies are really hurting. And the debt level, again, you can look at another data, extremely large debt level. And total debt to GDP is 300% in China, which is much higher than the other countries. And the stock market in China has been in a bear market since 2015, after the major drop of more than 50%, and still has been struggling at the 2,500 point level, and it was as high as 6,000. And the real estate developers, they are the worst part of the borrower sector. They've been borrowing very aggressively, and they have a lot of cash flow issues. And also for the Chinese money market, as a monetary policy, there's also the trinity dilemma, which is that as a, I would say, the emerging market economy, you can't really have three at the same time. You cannot have an independent monetary policy and a fixed exchange rate and free capital flow. So for now, I would say the capital flow has been controlled tighter in China, which is really against the goal of the economy, because the Chinese economy, the government, the authority wants the economy to be more open up, which means they need a free capital market. But the current situation of close to fixed exchange rate to a basket of currency, to US dollar, to euro, to yen, makes this free capital flow not possible. So that's a dilemma that the central bank in China faces. Employment, another big trend is that with substantial increase of employment in the service sector. And we all know that when the virus hit, the service sector, in fact, it hits the worst, because you have the restaurants, the airlines, transportation, entertainment, sports, etc. All those are shut down. That's why the employment issue is a major problem in China. As of now, our data shows that restaurants, they are mostly empty. About 40% of them have reopened, but people are still very worried, concerned to go there. We have seen some images that even if you go to a restaurant, you are supposed to eat by yourself instead of a big party to eat a large table. Movie theaters, concerts are still closed. Tourism industry is closed. Transportation is down 70%. So clearly, we will expect a large contraction of employment in China for Q1. Manufacturing industry is not immune. And Wuhan is a major industrial base in China. You have those like iPhone parts makers, etc., all around Wuhan. And it has been very difficult for the workers to get back to work, and also for the companies to secure the raw material. So the manufacturing industry is working well. So, but also let's look at some of the positive side. Which sectors benefit? I would say number one is healthcare industry. Clearly, after the virus outbreak, people were shocked to see how bad the healthcare, the hospitals, how badly prepared, how lack of public health infrastructure. So the whole sector will need to be completely revamped. So a lot of investment to be done with hospitals, pharmaceutical companies, and biotech research. So in China, they are rushing to produce or research a vaccine for the coronavirus too, like any other countries now globally. And also, I would say anything to do with online is benefiting from this outbreak. You have computer games. When people are locked in their home for a month or longer, they spend a lot of time playing computer games. online education, like we're doing now, right? Doing online videos. And also there have been a lot of cloud-based working, teleconference, etc. So the tech industry is, in fact, the trend of accelerating toward tech online adoption is happening now in China. Impact to GDP, very difficult to say. Lots of estimates, I believe them to be too optimistic. However, the government in China has been doing more stimulation to, that's the latest estimate. The state banks are offering 500 billion RMB loan to the small business, social security contribution got waived, medical insurance payment got reduced, tax exemption, and also 110 billion fiscal spending, special lending, etc. So the fiscal measure has been pretty strong, I would say, to counter the slowdown of the economy. And also, due to the control of the virus, now the new cases are really down to a trickle. The traffic in China has been rising, even though mildly. If you look at the red line, which is 2020 this year, the traffic really broke down since Chinese New Year, which unfortunately was also the time virus outbreak happened. Since then, it has been slowly recovering. And if you look at, in particular, for the past 10, 20 days, the traffic has been really recovering. Still not back to normal, but probably around 50% or more of the past same time normal traffic. Stock market is another interesting area. Out of all the global stock market, there have been a crash. Global market on average is down 30% range for the last month, since late February to now. The stock market in China has vastly outperformed the rest of the world. It had an initial drop, and then with the virus under control, the stock market robustly recovered. So the loss is about 8%. So it's about 1/3 as much as the rest of the world. So the stock market has been very strong. However, the property market in China had a record decline. I would say, obviously, Wuhan City, but it's very hard. I've seen some of the numbers of the property price in Wuhan has dropped substantially. That's the 20-30% range because it is the epicenter of the outbreak. But the rest of China, the property price has been declining very dramatically. If you look at foreign investors, they have had a large outflow in January and I would say early February because of the virus outbreak when it happened. And since then, there have been some small inflow in China, since late February. I would say largely due to the data of virus being under control in China. So foreign investors have been testing the water, have seen some small inflow to China. So let's have a quick look at the impact to the rest of the world. First, if we look at GDP, one estimate is China is roughly 16% of the world's GDP. US is 34%. Europe is 21-22%. Rest of the world is about 40%. So we are estimating first half of this year, GDP of China declines 12%. And second half of China probably recovers 50%. If the virus is under control, like similar to like the current situation now. If you look at the US, we're expecting some kind of 6% drop first half of this year and 4% rest of the world, similar situation. But in total, you can see that here the impact is largest in China, and most likely the recovery would be larger in China as well.
Hey, Kevin, let me ask you a question on that slide, if you can go back one. So to our earlier point about the containment efforts, I can compare and contrast China and Wuhan's containment effort versus, the US and maybe the rest of the Western worlds. If our containment efforts aren't as successful as China was, and we have more of a long tail, I'll call it outbreak and corresponding economic slowdown, therefore resulting in lower than projected here second half GDP numbers. Could that have a significant impact on China's economy as well, since they're still largely manufacturing based?
Sure, yes, definitely that will be a possibility. What we have heard, we talked to our colleagues in China, many of the export factories, they are seeing actually the new orders drop something like 80% range. So because of the global slowing down, the new order to China, the export part of China, has really slowed down substantially. So now the hope is, the US or Europe, Japan could recover. Otherwise, the impact will be felt strongly in China.
Okay. And then one other question and one comment. Is there a possibility for you to move your microphone a little bit? I think there might be some noise.
Okay, sure.
Oh, there you go. Good.
Yeah.
Also, one of the things that appears to be happening, at least in the short term right now, is an increased focus on nationalization. Obviously, part of the containment effort is to close borders. But if I look at that in conjunction with the impact of the trade war between China and the US, there was already a disruption to the global supply chain. Might we see a little bit longer term a shift in manufacturing, particularly if it's integrated with AI and automation from China back to individual countries, specifically the US? And if so, would that have a significant impact on this GDP outlook?
Yes, I think it's likely to happen. Clearly, I think most of the companies, multinational companies in the US and the rest of the world, now have recognized the over focus on the efficiency and not enough focus on the diversification of risk. And when the coronavirus hit, essentially a lot of supply chain got disrupted. So companies, they are totally looking into the diversification of the supply chain. And I would say, relocation of those supply chain would not be easy, will take some time. And I believe this is likely to happen in 2021 or even later. It will take several years to happen, but I think it's likely to happen. Many of the, I would say, tech AI-based, a lot of smart manufacturing are likely to move back to the US. And a lot of, I would say, lower-end production is likely to relocate to Vietnam, to Mexico, and I've heard some of them are likely to relocate to Italy because of the favorable, tax treaty of European Union versus the US. So the impact will be, I would say, a longer-term impact.
Interesting. I appreciate that. Thanks.
Sure. So so as we just talked about, as China is a part of global crucial supply chain, a lot of companies are running low on their inventories, and a lot of immediate impact is already happening. Korean car manufacturer stopped production. Airbus lost production capacity, shortage of medical materials, etc. And I think it's going to be having a long-term impact globally. And also, apart from the export part, China is also a large buyer. China is the largest importer of crude oil, and due to the huge reduction of crude oil impact from China, and the oil price war between Saudi Arabia and Russia. There's a the oil market completely collapsed. Oil price declined by 70% this year. Copper and all the other commodities have dropped very substantially because of the lack of buying from China. And I would also say that the US real estate, in particular, commercial real estate, are going to see less of inflow from the Chinese capital and likely some of the outflow from the sector. And let's go to another section 4 about the outlook. Short-term impact, I would say, people tend to underestimate. Very sadly, a lot of people have died. A lot of people have been disabled. I've seen some of statistics showing that even after you recover from the coronavirus, there's a permanent damage to the lung, to the basically to the human. So the human cost is huge, and Q1 economic number are likely to be terrible. And for example, PMI in China is down to 30, so a 20-point drop. It has never happened in the modern history. And I would say there'll be more bad news to come out. Many companies are likely to file bankruptcy, in particular small to medium-sized companies. One example, if you look at sales index, there was a huge drop in February, dropped close from 50 close to 40. And March, we have seen some recovery, but still it's at a very low level. So that's, the impact is yet to be felt to the rest of the world. Business confidence index, you can see it was a dive and then now came back, but still, I would say all in all, the business confidence in China, these years are much lower than a couple of years ago. Like what I said, we got, in addition to the coronavirus, there was a trade war impact. There was a large, extremely high leverage impact. Banking industry has been controlling the new loan, which hurts I would say, a lot of borrowers. So business confidence is a big trouble in China. Long term, I would say clearly large fiscal stimulation is needed in China. And I think many countries are going to coordinate on this fiscal stimulation globally. Recent G20 meeting, I heard there have been some kind of coordination on this. Vaccine would have to be developed, hopefully within a year. And I would say, fortunately, most of the patients will be cured, as we see that the recovery ratio is very high. Even in China, about 80% of people already have completely recovered. But in summary, China would need to mobilize all its resources to help people to rebuild the country. It will be a very, very long, tough fight. And I guess, what we can help, first, clearly we have to try to stay safe and healthy, everyone. And the virus is extremely fast spreading. And I've seen some statistics in China showing that there was people got infected after 15 seconds of conversation with another one. 15 seconds, yes. Wow. Someone got infected because he had a 15 seconds conversation at a supermarket with someone else. So it was very fast spreading. It's very deadly virus, much worse than flu, for example, or compared to SARS. The spread ratio is very high. And I would say, in particular, if you look at CDC number as well, a lot of the senior people are very much at risk. And also, I guess, we really need to make sure the disease number globally to peak soon. Otherwise, probably more catastrophic measures to be implemented. I saw today Russia is planning to stop all the international flights into Russia. India is looking at a similar situation. And don't forget, the southern countries, Australia, New Zealand, are entering into winter months, and the colder months tend to be very, bad, for the I would say respiratory disease to spread. So we might have a wave of, infection in the southern countries, and eventually they might actually get back to the US or to other countries, to China, in spring next year. So another second wave is something we need to be very cautious, to be careful about it, be prepared for it. And also, I really personally, I want to, in memory of a hero, Dr. Lee, who died for this virus, and he was the first whistleblower. Thanks to him, the initial news got out and people were prepared. So a lot less number of people died from this. So that's for him. And also, there are a lot of relief fund on GoFundMe, etc. Some of the organizations, we can all help. Humanity disaster, and we all help with what we can. I guess time-wise, that's my part of the presentation. So Scott, if you have any questions, we can talk about it. I'm happy to answer any other questions.
Thank you, Kevin. That was really dense. That was a great presentation. If I look forward to a post-virus recovery in China, assuming a neutral growth outlook globally and a neutral to favorable impact on China's manufacturing market, domestically, there's going to have to be a re-equitization effort done in China. Obviously, there's a lot of fiscal policy expenditures here. And you had mentioned the corporate debt levels and the stress on the real estate market. I think the real estate market in China is more heavily focused on developers as contrasted to the US and the West, where there's more stabilized office and retail and multifamily properties. But as a part of that re-equitization effort and an effort to kind of clean up corporate balance sheets, do you see REIT legislation fast-tracking and maybe serving a role in that re-equitization process?
Sure. Yeah. Scott, you are the expert in real estate. So I try to share what I understand, but it's true that the property market, real estate market in China in the past have been really focused on development, and going forward, I think they need more equity injection. So REIT is really something they could completely borrow or learn from the US to make the sector to have more equity investment, which would help the industry to reduce leverage and make it more stable. Yep,
good. And I also know that China has done a great job on focusing on tech, whether it's municipal tech, consumer tech, business applications, whatnot. Do you see a greater focus on this in the post-virus economy, as businesses have seemed to adjust it in the short term, working remotely and whatnot? Do you see a greater emphasis on that?
Yes, I think it is likely to happen. Big data technology implementation, I think, is a big trend. What the coronavirus outbreak it caused, I would say, it accelerated the traditional trend, which is actually people are likely to work remotely, move things online, Internet of the Things, and I would say the implementation of big data is likely to be accelerated in China. Even for real estate sector, I think they have to have more technology implementation.
Mm-hmm. Yes. Yep. And then lastly, maybe take this back up to a high level. I would say international relations between the US and China have been strained somewhat through the trade war. How do you see that evolving in a post-virus economy?
Sure. It is a very challenging time. It's true that the US-China relationship has not been great. And, the trade war last year and this year about, who to blame about the virus. I think it has caused a lot of frictions in China, in US globally. What I've heard, fortunately, in the medical industry, healthcare industry, the cooperation between U.S. and China has been very strong. Experts from the U.S. went to China to and they share the research. They have been jointly doing a lot of tests of the drugs, vaccine, etc. So hopefully, the government side can be learning from the private sector, learning from the healthcare, public health experts, and be more friendly to each other instead of blaming each other, because we are really facing a global crisis and we need everyone to be on the same boat.
I agree. One of the positive unintended consequences of this, if you could put it this way, is the fact that the entire world is going through the same situation, essentially at the same time. So there's this connectivity that we haven't had in the past. So hopefully that translates into better relations globally and a more interconnected society. So we'll see.
Sure. Yes.
Kevin, again, I know you're under a lot of demand lately for your insight, and I appreciate the time you've given us. Thank you. I look forward to sharing this with my students, and I'm sure we'll be following up with you directly with lots more questions as all of this evolves.
Sure. Thank you, Scott, for this invitation. I totally enjoyed the time to share with your students. Thank you.
Awesome. Thank you. Be healthy.
Okay. Thank you. Bye-bye.
Bye-bye.